Did you know that the CPI, Consumer Price Index, uses rental rates, not home prices, to calculate shelter inflation? So if you're tracking along with the feds, this is exactly why rental prices are so important to pay attention to. According to the Wall Street Journal, the race of inflation might be reaching its final lap. Its largest obstacle? The category of shelter. The article stated that consumer prices rose 3.1% in November from last year. That was helped by declining prices for some long-lasting goods like used cars, furniture, and electronics over the past year. That has raised optimism that some measures of inflation could return to the Federal Reserve's target of 2% early in 2024. The single most important factor standing in the way of inflation is shelter. It rose 6.5% in the year through November. And because it makes up 35% of the CPI, Consumer Price Index, it has an oversized impact. Without shelter factored in, inflation for that period would have been just 1.4%. This is such an interesting graph to take a look at. If you exclude shelter, the inflation rate would have been 1.4%, well below the 2% that the Fed has been aiming for. But when you throw shelter back in, it's 3.13%. So how, with rising home prices, is the shelter inflation category ever supposed to drop? Because rental rates are used to calculate that number, not home prices. And since most rental rates don't change but once a year, it takes time for the data to catch up. When rents get renewed, the CPI gets updated. The article states that the U.S. Bureau of Labor and Statistics surveys cohorts of properties at 6-month intervals, then calculates the price change using a 6-month moving average, adding to a lag in the data. The Bureau doesn't use home prices because they view home ownership as a long-term investment, and if your home value increases, your monthly mortgage payment doesn't change. Rent growth is down 3.3% according to Zillow, which is lower than the average from 2018 to 2019. Alan Detmeister, an economist at UBS, estimates that the shelter component of CPI inflation will fall to 3.75% by the end of 2024. That gives you a little bit more time for the lags in rents to trickle into the data, he said. At that point, there will be little inflation left to fight. If you have those finally coming down, he said, it's over. Perhaps that is why the Fed has hinted at pausing some of the rate hikes that were planned for 2024. This does bring a much-needed softening for buyers, but don't be fooled, the housing shortage will remain. So while the unrealistic year-over-year gains in home values have slowed, the demand for housing will keep competition healthy, which in turn will price out some families, thus creating a demand for rental properties. And around we go. Bottom line, inflation's finally coming down. That's a huge victory, and for wannabe homebuyers, perhaps a little relief on price increases. So many factors affect the housing market. Interest rates, inflation, the economy, the market. But right now, there's one particular group that's got major control over the housing market. I'm Lindsey Johnson, your resource for all things real estate. See you next time.